Everyone, welcome to another session of Property Talk Live. So for today, I'll be continuing from our topic last week where I talked about seven costly property mistakes that could cost you your investment. So welcome to Property Talk Live today, and I'm speaking directly to anyone planning to buy land, a house, or invest in real estate. So as you all know, real estate can build generational wealth, but it's only when it's done correctly. Because one wrong move can cost you millions, delay your progress, or even result in losing your investment entirely. So today I'm going to dive straight into the question. But before that, let me say something very, very honest today. Like I said before, real estate can make you wealthy, but real estate can also wipe out entire savings if you make the wrong move. That is, if you do not watch out for some mistakes that you're supposed to watch out for. And the painful part is that most people do not lose money because the property is bad or the property is not of value. They lose money because they make mistakes that they could have avoided, mistakes that they would have watched out for if they knew these things that I'm going to mention. So today I'm going to break down the seven costly property mistakes that can ruin your investment, especially if you're investing in real estate in Nigeria. So if you're planning to buy a land or a house or invest this year, you need to hear this everything I'm going to say today. You need to listen to it because one wrong move, one wrong signature, or one wrong assumption, or even a wrong agent can cost you millions, and you could lose your entire savings. So I mentioned some of these mistakes last session, but I could not finish it. So today I'm going to repeat everything I said last week, and then I'm going to talk about the rest of the mistakes as well. So the number one mistakes I mentioned last week is what happens when buyers skip proper title verification. Like, what's the worst thing that can happen if you do not verify your property title properly? So the answer is not far fetched at all. This is how people buy land that belongs to government acquisition. This is how people buy property that is under court disputes, property that is under court disputes. So this is how people pay millions and then they still cannot build their houses. So some buyers do not check if the land they are trying to purchase is under acquisition. They do not check if the land is under court dispute. They do not check if the survey for that land is genuine. They do not check if the seller is the real owner of the property. They do not also check if there is an existing debt on the property. They just say that, oh, it has a CFO, and then they relax. No, it shouldn't be so. As someone who is investing in real estate, documents that you're going to be getting must be verified. Not just have to see them. You need to verify it. Take it to where you're supposed to take it to, and then confirm if those documents are real. Because due diligence is not optional in real estate. It's like protecting yourself from scam, from losing your entire investment. Because if you do not verify, it's like you're gambling and not investing. So skipping property tax verification is one of the most dangerous mistakes in real estate, and many buyers rely on verbal assurance or incomplete paperwork without confirming ownership at the appropriate land registry. And they did not even check for government acquisition. They did not verify the survey authenticity. They did not confirm if there are certain risks they're supposed to avoid. So due diligence protects your capital, and then it prevents litigation, and then ensures you peace of mind. So my second question is, why is buying property based on emotion like a risky decision? Have you ever seen a fine house and then immediately fall in love with the house? Like, oh, this house is beautiful, I love it, and I would like to buy this property. That's exactly where the danger starts, because many people buy houses because the tiles are shiny, the POP ceiling looks beautiful, or their friend just bought a house in that estate. So, or probably the seller is urging them to buy on time, or this is the last unit remaining. If you don't buy this one, there's no house for you to buy here. They do not check if they do not check the rental demand of that property. They do not check the appreciation potential. They do not check the location growth. They do not check the accessibility of that property. They just go ahead and buy it because the house is beautiful or because of some other reasons. Because a beautiful house in a bad location is not an investment. Actually, it's a liability. It's going to cost you a lot. So you need to build your wealth. If you're investing in real estate, you need to use in your investment in real estate to build your wealth strategically, because buying a property might look attractive, but if the location lacks demand, long-term goods, and the infrastructure potential, it may not appreciate. And decisions that are driven by excitement or peer pressure or urgency, they often ignore financial logic, and real estate should first make economic sense before satisfying lifestyle desires. So moving on to my third question is, how can overstretching your finances damage your investment? I'm talking about overstretching your finances. For this question, this one is like a silent risk that is very, very dangerous. It's not common, although it is, but not very common, because some buyers usually empty their savings to buy a property. Some might even take heavy loans. Some even commit to payment that they cannot sustain, payments plan that they know that their income cannot meet up with. So all of a sudden an emergency happens and then everything collapses, all your plans to get that property collapses. So real estate is not something that should choke you. If buying that property is not going to give you the peace of mind that you crave, then if it's going to remove your emergency fund, if it's going to leave you financially unstable, if it's going to stress your business cash flow, your normal income, then you should pause, because real estate is something you need to calm down and make a proper decision to buy, because a smart investor actually leaves the room to breathe. They know when to pull out from a market if it's not paying them. So buying beyond your financial capacity can create unnecessary pressure, because high repayments commitment or draining savings completely can limit your ability to invest further. And if emergencies arises, it can force you to sell that land even at a lower price than you bought it from. So you need to avoid tying up all of your capital in one transaction just because you're trying to get a property. So moving on to my fourth question is, why is ignoring location growth a major mistake? That is ignoring location growth trends, because people know that, oh, they are selling lands in Lekki and a lot of rich people are buying there, so I want to be part of them. I want to go and buy in Lekki, without knowing that Lekki is already a developed area. Meanwhile, you could get properties in another area that within few years is going to appreciate. Within few years, that land is going to develop. You know that if you are going to buy it cheap, if you buy there now, because within few years, by the time people start building their lands that they bought there, the prices of that land will go up. It will appreciate more than what you bought initially, because of there are going to be so many government projects going on, infrastructure development and all that. So if you buy in a places that is developing, I'm not talking about stagnant areas, because those ones will not allow your property to grow. You follow development, you make your own research, because location determines appreciation potential. Actually, buying in an area without infrastructure development, economic activity, accessibility, or population growth reduces long-term value, and investors should research on road expansion, commercial development, government projects, and the demand pattern for that property in that location, because the growth of that land will determine the value of the property in a few years time. So another mistake that you should watch out for is the danger of delaying property investment for too long. That is waiting too long to invest in a property. Like I said, you need to calm down when you're trying to make a decision to buy a land or a house, but there are some times that you do not need to wait for too long before buying the property. Saying, "Oh, I'll buy when the price drops. Oh, I'll buy when they reduce, or when there's a promo going on, or this thing." If you continue to waste time like that, you will miss that property. So, and when you continue to wait like that, the property increase, it does not reduce, because prices will increase, the demand will increase, inflation will increase, and the land that you ignore at maybe 15 million naira, before you know it will turn to 25 million naira. So waiting without a proper strategy is very, very expensive, because as they say, time is expensive. So wasting time, you cannot get it at that same price, because time in the markets, nothing beats time in real estate market, because many people delay investment while waiting for the prices to drop. And historically, as we all know, property appreciates, it does not depreciate, except there's an issue like a major issue. And that's why we are telling you to do your research, especially if you find out that there are government projects that are going on there, and then so many other things that you know that, okay, this place is going to be a developed area very soon. Then you can go ahead and invest and not delay. So another mistake you should watch out for is, how does failing to understand documentation hurt buyers? Not understanding documentation, like the document you are receiving, you need to understand what each of those documents stands for, because many people do not even know what they are signing. They do not know the documents they are trying to take over. Do you understand what we mean by deed of assignment, or survey plan, or governor's consent, or C of O, that is the certificate of occupancy? You should read about these documents. You should understand what they do, their role on that property you're buying. Because if you do not understand what transfers the ownership of that land to you, then how are you sure that you own that property that you're paying for? Because ignorance in real estate is very, very costly. And if you do not know, you need to ask people that are sure or they have a knowledge about it. If you are unsure about any document, you need to verify it. If necessary, you should involve professional. In fact, it's compulsory that you involve professionals so that the ones that can verify, because important documents as the CFO, survey plan, and governor consent, they determine the ownership of the land, they determine the legitimacy of the land. So failing to understand this document can result in incomplete ownership transfer or legal exposure, because buyers must review the documents carefully, and then when necessary involve qualified professional. Like I said, they are the ones that can tell you which document is real and which document is not real. So the last risk that I'm going to be talking about is working with the wrong agents or developer. I'm talking about agents that are not certified or they do not really have an experience. They're just in it for the money. So let's be honest, not everybody in real estate is a professional. We all know. Some do not verify, some will not disclose the actual cost or secret of that land they are buying from you. And some will disappear after payment. Once you pay them their commission, they are off. So before you pay your millions to get a property, you should check the track record of that agent that is securing the property for you. Ask for previous transaction of lands they've sold, verify the document that they are presenting to you, and then you should confirm their physical office, because a true agent that is registered with the government and is certified, they will definitely have a location, because trust is good, but verification is better. And then not all agents or developer operate professionally, because working with unverified parties increase the risk of fraud, scamming you of your money, misrepresentation, or hidden liability. So you should verify the track record of that agent that you're involving in your investment. Verify their previous transaction, confirm their documentation authenticity, prioritize transparency. So reputation matters a lot in real estate, as we all know. And with all of these mistakes that I mentioned, if you're able to avoid these 7 mistakes, then trust me, you are already ahead of 70% of property buyers, because real estate is powerful. Real estate builds wealth. Real estate creates generational assets, because it's something that appreciates, it does not depreciate. But it's only when you do it wisely. So if you're planning to invest and you want to avoid costly mistakes, you should speak to professionals that are well known. Get guidance on how to do it so that you can do it properly. And if this episode has helped you and you've gotten enough knowledge that you feel like you can take advantage of before you invest in your real estate journey, please send it to people that are planning to buy property this year, because one informed decision can change your financial future. You might have been planning to invest in real estate, but you do not know how. I'm sure with these few mistakes and risks that I've explained now, you can know what to watch out for when you're trying to buy a property. So if you feel like you know someone that might be interested in investing in real estate, you should please send this video to them so that they can watch, they can listen, jot down the mistakes, and they know the things to watch out for. So thank you very much for joining me on this episode. We really, really appreciate your time and your patience. So please subscribe, like, and follow us on here on YouTube. Subscribe to our YouTube channel, turn on your notification button so that you can always get notified whenever we are coming live, because we go live every Thursday by 10 a.m. in the morning. So thank you very much for joining us on today's live show. Really, really appreciate it. See you next time. Bye.